welcome everybody. My name is William Robinson. I'm the head of the DeFi Alliance's Accelerator program. I am here to sort of introduce this program, what the DeFi Alliance is, and then Joey Krug, our keynote speaker. So we're basically an industry network and an accelerator program. And that makes us like very excitedly Web3, and that's where we're moving towards as a direction, is a community-focused, community-first accelerator looking to push DeFi, NFTs, and Web3 gaming in the fastest way possible to attract the most users and really transition the world from Web2 to this like internet of value. Our primary benefit to our accelerated companies is on liquidity, where we have an enormous amount of market makers and liquidity providers in our network, which makes us like a great place for DeFi protocols to show up, learn, hockey stick their TVL. We also have a very strong network because we're a community, and so any founders coming in get to connect very quickly and very efficiently to a lot of different people. Finally, this is a place for investment. A lot of the companies here today are raising. They're going to look for funding in any way they can. Usually they get to decide the terms because these are the very best of the best. We have an amazing pipeline of applicants. These were between a 5 to 10% acceptance rate in the past few cohorts. And so we really hope that you do get to talk to them at the end of the demo sessions in breakout rooms if you are a member of the DeFi Alliance. That will be available. Today for the public, in this publicly registerable link, the videos of it, the content will be Joey's presentation and then a sort of trailer for each of the protocols we accelerated. We're doing pretty well. This is the list of projects we've accelerated in the past, and we're growing. So DeFi Alliance Accelerator 1 had 7 cohort teams, and now we're up to 22. So we're scaling. And you can see that many of these are famous protocols. We've accelerated 15% of the top 100 DeFi protocols out there, which we're very proud of. And today, what I'm going to do is introduce you to Joey, who's been in crypto for a long time. In 2013, he built a sales system, point-of-sale system, which enabled Bitcoin payments with sound and Bluetooth. In 2014, he drops out of college to build Augur as a co-founder, which was the first like decentralized prediction market platform. And the whole point was to like solve this terrible Oracle thing where we didn't know how to make a decentralized Oracle on-chain. And following that, co-founded Eco, which we'll hear about later. And then he joined Pantera Capital in 2017 as CIO to oversee the fund's various investments. Pantera Capital is an institutional firm focused on Bitcoin and other digital currencies, and it's given out billions of dollars in returns because it's just so old. I think it started buying Bitcoin at $65. So Joey today is going to tell the story of Augur, of Eco, of Pantera, and we're going to go into some hotter topics as well. The hope is to keep this presentation at around 45 minutes and then transition to our demo day videos. So for those who are confused of what GM is in the chat, that stands for good morning, and it is a meme focused on how exciting this bear market is, not bear market, this bull market is in crypto. Everybody's sort of celebrating each other and how good the mornings are. So apologies, no bear market. What is a bear market? Never heard of one. Joey, you can unmute yourself now, and we can like do this banter, and you can also like say hi.
Awesome, thanks for having me.
So, tell me about Augur. Like, why did you start it?
Yeah, so I started Augur in late 2014, and the reason was basically, it was kind of like one of the more like, at least at the time I thought, practical use cases of the tech. It's like the full context for Augur is like back when I was 10, I used to do a lot of betting on horse races on offshore books. And there were a bunch of problems, like sometimes the books would freeze your money. Sometimes the books would just like disappear and run away with your money. Um, and then the fees are very high. You'd pay up to kind of 5 to 10% of winnings. This is like um, before kind of like horse betting went online in the US, and it became like the horse betting markets in the US now online are pretty good, but back then they weren't. They were all offshore. And so I kind of faced these problems before. And then when I saw Ethereum, thought it was going to be really like interesting and impactful for the financial system, and thought that if you created these kind of synthetic derivatives markets on anything, that would be really cool. And so that's sort of why I started building Augur. And then very quickly, once I started it, realized that like this Oracle problem was a massive problem because you have to know how to resolve the market. And stuff like Ethereum doesn't have native internet access because that would open up a bunch of different like vulnerabilities and security holes. And so that's kind of how I found myself playing around with that problem set.
Sure, and I tried it recently again after many years hiatus, and I see that it's evolved quite a bit. It's like on Polygon now. It has betting markets that look a lot like binary options. Like it's not just betting on sports, but looking like a financial instrument. It's pretty interesting for those who want to test it out. Um, I'm curious, what were your like biggest challenges with Augur? Because there's quite a few, right? There's regulatory challenges, there's building challenges, tech challenges, vision challenges. Like, what were the things that freaked you out the most? And you can tell me which ones you didn't overcome, also.
Yeah, I mean, I think the biggest are kind of regulatory and go-to-market hurdles, and then also how those filter down to the tech. So, like if you look at it from like a tech standpoint, Augur is very hardcore about decentralization. Everything from the smart contracts to the user interface. Like the user interface, we've never even hosted a UI for Augur. They've always been deployed onto IPFS, and our website just redirects to a IPFS hosted UI. It's like there's all these kind of like challenges that brings. Like, okay, if you make a UI and other than connecting to an Ethereum node, you don't want to have any other centralized endpoint. How do you do that? We built these like really complex systems for like basically storing like on-chain data on IPFS so we could download it faster than downloading it from connecting to like an Alchemy or Infura endpoint, because that would take forever. And that like we spent like months on that, figuring out how to do that in a secure way. And so there's always kind of little like tech things that the regulatory environment makes you have to create that are actually really complicated. So that's why Augur took so long to launch in the first place. And then I think the other area is go to market. Like I'm a US citizen. Like there's a lot of things that we just can't do as creators of the protocol. Like, I mean, I would personally love to be able to trade on it and market make on it, and do a bunch of paid user acquisition and stuff that other projects might be able to do, but we're not able to do that because of what we've built. And so like that makes things like acquiring users extremely difficult, basically.
Right, because I'm a Canadian and I get to benefit from all of that for now, anyway. And so, yeah, the markets are not as robust as you would have hoped, given how like I used to gamble professionally for a little while, and like the vig was enormous. Like the gap of margin that made by bookies was like 20% often, and on Augur it's like pennies. So it's just such a useful solution that I'm sad isn't used more. Um, were there any like serious pivots you made while trying to build Augur? Like as you realized like the holes you were falling, the pitfalls you were discovering?
Yeah, I mean, there's a couple different things we've done, like especially more recently. Like if you look at V1 and V2, they use the Augur Oracle system, and in V1 it took weeks to resolve markets, and in V2 you can do it in about a day or two, but it's still kind of slower than most users want. We actually launched like kind of like a parallel system called Augur Turbo on top of Polygon, which is basically just like Augur designed to be easy to use, but like compromising on a bunch of different like things that V2 doesn't compromise on, right? Like V2 basically makes no decentralization trade-offs. It's super hardcore. Augur Turbo, like for instance, it uses like Chainlink to resolve the markets. So they resolve, like within an hour of the event ending. And it's, really fast and cheap and easy to use, that sort of thing. And so we've
Does
played
that
around
make
with
you
like different.
sad? Because you were supposed to be the oracle, right? Like you were this like hardcore decentralized oracle, and then like the solution was to use a not as decentralized oracle. Like that feels like a real bummer.
Yeah, I mean, it's a bummer in the sense that like I don't think solving the Oracle problem on like the scale of like an hour is possible to do like from an economic security guaranteed standpoint, right? Like, I mean, like there's a ton of ideas I've played around with, like doing that with Augur's Oracle. They get really complex really fast. Like, Augur already is a very complex app. Well, if you look at like the contracts, it's probably like I would say on par with like Maker, which is kind of like the other most complex thing. And like the systems I've like designed on paper to like make Augur be able to resolve markets in an hour or so, like it's theoretically possible. It's like 10 times more complex than Augur is. And so it's like, you know, I think like the bigger challenge of the Augur is go to market, right? In acquiring users. And so like if anything can take off on like the Augur Turbo stuff, you can always go back and do a bunch of R&D to figure out, how to like make the Augur Oracle resolve in an hour or two. Um, but the other downside of that is like it requires people paying pretty close attention. Like it requires people running bots, that kind of stuff. It's not impossible. It's just like it's not worth the trade off right now, I would say.
What I noticed that was new on Augur was a sort of description of liquidity provisioning under the terms of APY. Like I don't recall that, at least in like 2018 when I was playing around with it. Like that if I put $10,000 in and there's like a 500% APY, like I'm liquidity provisioning for a Uniswap pool or something.
Mhm.
Um, what can you tell me about that? Do you have any like thoughts around it, like this kind of
Yeah.
user experience?
Yeah, I mean, like, so the idea behind that is, in on Augur Turbo right now, there are some like liquidity rewards, like mining rewards, that are basically funded by like Polygon/Matic. And so you have like an APY from that, and then you also have the APY from the trading fees, but like you can't really predict the trading fee part. So like, most of the APY is basically just the liquidity mining rewards.
Right now, I gotta say the UX is kind of broken because on a lot of them it says APY over 999. I think it would be worth it to add room for one more significant digit so I can know like which
Yeah,
one's
that's a good
gonna be
point.
like. I want to know which one has like 40 million APY versus like 40,000 APY.
Hmm.
You heard it here first, friends. So, what does like the future of Augur look like before we switch like gears to your other projects?
Yeah, so I think for Augur, like the main feature of it probably looks like probably even like more decentralized, like maybe some sort of DAO structure is something we're kind of thinking about, like because then like a DAO can do more interesting things than we can from like the user acquisition side, that kind of stuff. So I think that's potentially interesting. Um, and then like from like a feature functionality standpoint, like Turbo is essentially feature complete. There's obviously like rough edges to fix, like the 999 APY thing and kind of like small things like that. But it's like functional and works. And so I think the main problem now is more on the go to market side, which I think is something where a DAO can be more interesting than what we're able to do at the Forecast Foundation, which is essentially zero on that side. We've pretty much only ever written open source software and kind of restricted our role to being that, which I think is smart from like a operational regulatory standpoint, but it doesn't really work for user acquisition.
Mm, right. Well, the DAO piece is interesting, right? It's really dependent on the community you've built and you've seeded, and like the quality and like the values of that community in your Discord. Um, and I was on there, and the activity's like a little light these days. And so, like building how would you imagine like bootstrapping and like revitalizing that community to like take on the role of a DAO, or would you see yourself bringing in people from the outside to like sort of top down seed a DAO?
Yeah, I mean, I think there's like two kind of like factions within the Augur community. There's people who are just like all they care about is decentralization and that's it. And they kind of think like Augur v2 is fine and you don't really need anything more than that, which is basically just like ideological. It's not like focused around making something people use. And then the other group is people who are predominantly care about like making something that people actually use and want. Um, and I think like from a DAO standpoint, I mean, there's interesting things for both parts of the community, right? Like the hardcore decentralization people will probably do like R&D to figure out how to make the Augur Oracle resolve in an hour. I mean, there've been conversations where we basically figured that out. It's just not really been built out yet. Um, but I think the more interesting part is kind of the user acquisition people. And I'd say it's like a relatively small faction. But I think there's a lot you can do with like, increasing liquidity mining rewards, and then also some other sorts of like, kind of paid marketing outside the US, that a DAO would be able to do, that we're not. which I think could potentially be interesting. And those things don't require like a huge amount of people within the community. It requires kind of like a core contingent of, I would say, like 10 to 15 people, which I think we do have. And then kind of if it starts to get interesting and more people start to use it, then you can start to loop more people in, and more people will become interested in it. If it doesn't take off, and like, it's just going to be those 10 to 15 people, and that's kind of it, is how I see it.
Sure, sure. Okay, well, thanks. Let's switch gears. So I'm trying to learn about eco. And one of the problems that I run into learning about eco is that it's targeted towards like not like degen crypto native power users who've been around for like 8 years. So like I actually have no idea what it really is doing other than what. So can you like say like both pitches? Like what is eco to like a normie, and then what's eco to like us who are inside like the club?
Yeah. So eco is basically the exact opposite of Augur. Like, so like with Augur, we made everything hardcore decentralized, and then tried to get users. And then with eco, we took the exact opposite approach, which is make it entirely centralized, get a bunch of users, and then decentralize it. Which I think is like something that I was wrong on in the past. I think this approach is much better. Um, and and so basically what it is at the very highest level, we're trying to build like a 100x banking experience, but not actually build a bank. And so if you think about like some of the most successful startups over the last decade, they're all like, X, but not Y, right? Like Airbnb is like the largest sort of hotel chain, but it owns no properties. Uber's the largest taxi company, but it owns no cars, that sort of thing. And so I think like what you can do is you can make a product that basically offers kind of like every aspect of banking, but it's 10 or 100x better for the end user, and use crypto in the back end to power it. And so that's sort of what we're doing. And I would say like if you look at kind of the functionality of the Eco app when we first launched it, it had basically like a kind of like savings wallet where you can earn interest in the back end. We're powering that with like USDC. Then we launched the ability to spend, and so you can spend at certain merchants and get cash back. Mostly kind of the popular merchants millennials spend at, like Uber Eats, Amazon, that kind of stuff, and then expanding from there. And then more recently, we're launching bill pay into the app, so you can start to pay some of your bills with it, and you can kind of see where this is going. Eventually, you'll be able to pay other people. Eventually, you'll be able to effectively do things like wire transfers, and uh, and so kind of like the second part on the DeFi, kind of more degen side, is like, we wanted to prove that we could get users without actually having like a token in the app. Um, and then once we prove that to ourselves, like getting kind of real product market fit, then the idea is basically supercharge everything with like tokenomics and that sort of thing. And so, we haven't like published all of our plans on that, because like the idea was like we want people to use this um, without knowing that they're going to like have any benefits from crypto, like from like actual native crypto. And then like once I can prove that, then like tell people about it. And so like I'll tell you like some of the public stuff. I'm not going to talk about the stuff we haven't
It
launched
feels
yet.
like we're getting a lot of alpha leaks here.
But
I'm hearing reverse airdrops, everybody. I don't know if your ears are hearing that too.
but so basically like if you go to our website and look under careers, there's a listing for a smart contracts engineer, which like if you're interested in it, definitely ping us. And what we're basically planning to do is eventually launch a currency. That's something that's like you can find it on our website. It's written there, but most people don't know it or see it because nobody actually clicks on the job listing and looks at the smart contract engineer role. But that's sort of the long-term, big vision, is to kind of go to the roots of crypto, where like you would actually use it in a transactional way, and build something that gets millions and millions of users doing so.
So you're gonna be the world's like largest bank without any vaults? Is that the thing you're like excising?
Yeah, you basically, and without like the kind of high rent seeking fees, right? Like the idea, the idea
No
behind
tellers either, right? The
yeah, no
largest bank
tellers,
without any tellers. Yeah.
yeah, basically cut out kind of all the fat, and then any sort of like economics that do exist, would go to token holders. That sort of thing is kind of the long term vision.
Got it. And what's the APY like these days on my like deposit of USDC at Eco?
Yeah, so you can basically get right now you can get up to 5%. So like if you join, you get 2.5%, And then if you refer, a few friends, you can get 5%, which has actually worked out really well as like a user acquisition strategy.
Interesting. It's not as high as I've seen on other services like BlockFi or Ledin or Genesis Capitals, like derivative whatever's. Why? Like, are you guys taking the yield yourselves to grow, or have you not cut good enough deals with lenders, or are you taking less risks?
Well, I mean, one is we're definitely taking less risks. I would say like we have like most of these users don't really know too much about crypto, so we want to keep it kind of as like low octane as possible while still being much better than your bank is kind of the aim there. And then I think the other thing too is like there are other parts of the app um, that we use like some of it to fund, right? Like yeah, you get 5% interest, but you also get 5% cash back when you spend on merchants. And so
Oh,
there's like
okay.
there's other parts of it too that rather than just paying say 100% of interest to users, there's other parts of the app that you can fund with part of it, that sort of thing.
Okay, that makes sense. So uh, I see. That's a clever strategy. So you're basically working on these two projects to some degree, but you also have like Pantera. That's your like third hat that I see you wearing. Like, I don't know what the proportions are, but like maybe you tell me, like, how is your time supposed to be divided according to yourself?
Yeah, I mean, I'd say Pantera is definitely like my main focus. If you look at Augur, it's mostly on kind of like high level strategy stuff, um, just kind of hopping on the weekly strategy calls, that sort of thing. And then for Eco, I'm mostly focused on the currency side. When we started it, um, we were kind of talking about all these ideas, and I said, well, like if we want to do this right, like long term, like we kind of need our own currency at some point. And then I got kind of tasked with helping spec a lot of that out, and because I ventured the idea, and so that's sort of what I focused on with Eco is kind of helping spec out the currency, um, both from like a design standpoint, kind of also a high level kind of technical architecture standpoint. Um, and then Pantera is like what I'm, spending kind of like day to day time on, which is my main focus. Both I say making investments into companies, helping founders out, and then also, on the liquid trading side.
So a lot of our companies are looking for help all the time, right? And thinking about tokenomics and building out your currency, because that's sort of like the thing no one teaches you in school anywhere. And you kind of like have to look at examples of what people have done, and it's hard to know why people make decisions because they're like legal problems that only like people with access to great lawyers know, and there's technical problems that people who have like really strong architectural sense of how Ethereum works or other blockchains they're building on. It's like quite difficult. So I imagine that you, like a VC at Pantera, that's like one of your value adds, right? Is that you can help people think through that. Um,
Yeah, yeah, definitely. I would say like the main things we kind of help people with are one, helping them with kind of like architectural and kind of like high level design like decisions, whether it's on like the actual tech architecture or on the kind of game theory economics side. And then also like how that interfaces with the regulatory side of things. Like one thing that I've seen across a lot of companies is they get advice from counsel, and then if you read like the memo that counsel sent, like the council clearly didn't understand like how the thing these people have actually built works. And so like I'm not a lawyer, but like the logic in their analysis just like completely falls apart because they thought that something was centralized and it wasn't, or they thought something was decentralized but it was actually totally centralized. And then like the decision tree of the analysis just like collapses. So I think like one other thing we help people with is like figuring out if there has been a disconnect there with advice they've gotten from counsel, then helping them kind of like bridge the gap so that they actually get solid legal advice, that sort of thing too.
oh, interesting. So now that you've been like a VC for an extremely long time, but you were a founder before, what do you wish you knew having this like hindsight? Oh, I'm a VC now. I wish I had known in 2014 when making Augur this or that or whatever.
Yeah, I mean, I think like back in 2014. I mean, I probably wouldn't have changed too much, like in hindsight. I mean, it depends what you're optimizing for, right? Like I built Augur because it was like fun and solved kind of a problem I had. Um, I wasn't building it trying to make a bunch of money. If you are optimizing for like rational kind of normal business success, though, I think like if you're early in the industry, like instead of building some super complex, monolithic thing, you should just like solve all the problems that you face along the way and make those into businesses. Like for instance, like um, everything from like, building systems effectively like the graph in house. That could have been a business on its own, or running Ethereum nodes as a service definitely could have been a business on its own. And there's like 10 things like that, right? That we've like come across when building Augur, where it's like they're definitely much easier problems and much easier to solve, and you'd have a lot more business success doing so. I probably wouldn't change what I built though, because it was really fun, and it's cool to see it exist. But I think like if you're optimizing around like creating a successful business, then that would be my advice: is like just build a lower hanging fruit, the problems that you solve along the way, because it's like way easier and has way higher odds of success.
Do you ever like give out that advice? It sounds kind of hard. Like I see you, my founder, who I've invested in, are building this, but I'd like you to just build this instead, which is like one of your support pillars.
Yeah, I don't think I've ever given that advice out. But I think like it's something people should think about at least, right? Like, and it depends how attached people are to building something. Like, if it's a team that like has pivoted once, and then they come across something, and then while building that new thing, they come across some problem, then I think like it makes more sense. Like actually, Alchemy is a good example of this. When they started, they were selling software to hedge funds, and we were a customer of it. And as part of that software, they had to build Ethereum nodes. Um, I never gave them the advice to like do this, but they made the connection themselves and realized that if they just made really really dang good Ethereum node software that had like almost no issues, that is like a way bigger market, and also a kind of less challenging problem to solve than like pitching to hedge funds day to day, like on this like beta product, which like not that many people wanted to buy, versus like everyone has this node problem. So like people have definitely realized that, but I didn't like tell them to do that. They just did it on their own.
Got it. Okay. Um, how do you see like decentralized UIs evolving? Because this is a big part of Augur. It's actually kind of weird. Like you go to Augur's website and you have to wait 5 seconds, then you get sent to some like IPFS address that's like kind of weird looking. And that's like a real commitment. And I've seen you like argue about this commitment in the past. Like, and now with the SEC cracking down on lots of DeFi protocols, like, do you see this as like an obvious progression that all UI on top of like DeFi, for instance, will be decentralized?
I think so. I've always said this about Uniswap. Like, I think they have a larger amount of regulatory risk than they should if they just like redirect it to a UI that they didn't host. Right? Obviously, it doesn't absolve you from all problems, but I think it's a better structure than hosting a UI yourself, where you have like a domain and that sort of thing. Um, and the the redirects are inconvenient, but I think it's better than the alternative, where like you're kind of like in charge of this UI. Um, I think long term though, like the way this will work is not via this clunky redirect system. I think the way it'll work is browsers will eventually have like native support for IPFS. So I think Brave might already have this, and then I think like over the next 5 to 10 years, I think the other major browsers will eventually add it as well, where like you can just go to a URL that's like Brave does, somebody said in the comments, where you can just go to a URL that's directly on IPFS, and it just works. And then like if you add like ENS on top of that, which would be not that hard for browsers to do, then you actually have like the full like feature set to running decentralized UIs in a way that doesn't suck. So I think that's the long term progression.
Oh, that makes a lot of sense to me. And I'm sorry for everybody who didn't understand anything about that because it's kind of technical. Like, but highly encourage everybody to look up ENS, Ethereum Naming Service, and IPFS, the Interplanetary File System. I think that's the name. So, how much further do you see DeFi innovating? So, we have this like set of Lego blocks. We're building on top of it. The low hanging fruit feels like it's been plucked, and now like there are harder problems to solve. Do you see like DeFi growing new and surprising protocols in the near future, or do you think like it's going to be quite a slow slog to get further down the technological stack?
I think there's still a lot more room to go in terms of DeFi innovation. Um, if you think about like the internet, right? Like um, all the basic primitives existed by 2005, which I think is where we are today. Like all the basic primitives do exist for you to be able to build all the cool stuff. But the internet got really interesting by like 2012 as well, when you have the advent of mobile, all these mobile apps, all this sharing economy stuff. And so I think like we haven't seen like whatever that next phase of DeFi is, and what it will look like. But I think the primitives exist, but like really cool new kind of innovative financial products will be built almost certainly, I think. And if you think about like legacy finance, right? Like every like, I don't know, maybe 10 years, a new kind of innovative product is built. Some of them people don't like credit default swaps, but like they do have value in certain circumstances, I think. And so there will be like a much faster pace of innovation in DeFi, right? Because like if you think about all the work needed to launch credit default swaps for the first time, um, that's much higher threshold than it is to launch a new DeFi, financial contract that you can just spin up on Ethereum and ship. And so I think we're going to see so much more stuff to come for the next decade or so, I think.
Oh, cool. Um, so how do you see the DAO space evolving? So that's where we're seeing a lot of growth now, new tooling coming out, but it really does feel like our uncharted territory for a lot of people, and it's growing so fast. It's hard to find good DAO people too. Like, what are your thoughts in that area?
Yeah, I think DAOs are really interesting. I think like the there's a couple like major problems with them though, right? Like the biggest one is like governance, right? Like, majority governance where it's just like a token weighted vote may not be the ideal structure like long term. Um, I'm not sure what's better though, right? It's like reverts to a political discussion where I don't have the answer. Where it's basically like what form of governance is best. Um, and like I don't know, like shareholder governance does work decently well. Maybe it converges to something looking like that, where like you have like some sort of like board of people that's maybe larger than the legacy world, because there's no reason it needs to be like 5 or 6 people. It could be like 30 people who makes kind of more quick, fast decisions, and then people like vote to kick them out. Something like that. I don't know, but I do think that will evolve a lot, and there'll be a ton of experimentation in DAO governance over the next few years. And then also in terms of like I think things will get a lot more rigorous too in terms of DAO spending, like what people are spending treasuries on. I think the Yearn team does a good example of this. Like they build actual like full like financial reports. Like if you look at like like it's kind of a tangent, but if you look at like what the SEC's like concerns are, like basically every concern I would have as an investor is addressed by like these awesome like 30-page slide deck, effectively quarterly financials that the Yearn team puts out. Um, and so like stuff like that, I think it's gonna be more and more common for DAOs and token protocols to basically like show their users what they're spending money on, and kind of like what the vision is as well. I think it's important for that too.
Interesting. Um, I'm curious about this like random question I have in my head, which is, in the United States and in many countries, the goal is to have a decentralized vote, but to ultimately like put one person in power, like with some checks and balances. And I don't see that being replicated in DAOs, like where we don't like elect Joey to be head of Augur as a DAO and to make like unilateral decisions that we follow. But there's like real potency to that, like having single points of failure, but also single points of decision making. You think we'll see that, or you think that's just like against the ethos?
Yeah, it's a good question. I think we'll eventually see that. Um, like I think the way it will look though is less like, oh, you have one person in charge, but more like you have different points of accountability, right? So like I could totally see projects basically being like, hey, this person's like in charge of like getting our financials already, like for like what we're spending the DAO money on, and then also for like being a check and balance there. And then like if the finance person does a bad job, the DAO votes to fire them and replace them with somebody more competent, that sort of thing. And then like there's maybe somebody else who's kind of spearheading like engineering management, that sort of thing, versus it being like a total free for all. um I think like there's something in the middle between a totally flat hierarchy and then like top down CEO, and I think DAOs will settle somewhere in the middle between those two, versus like right now they're mostly entirely flat. um I think it's unlikely that you'll have like straight up just like CEO elections or whatever. And then like it goes from there. I think it's more likely we settle somewhere between those two extremes.
Okay. Um, so my last question for you is like, what's your hot take, wild inspirational thesis that you like to blow founders' minds with? Like when you're trying to get allocation space, like you've got maybe like 100 founders here on this call, and like how do you like gigabrain impress them these days?
Yeah, I mean, it's generally not with like telling them our thesis. I mean, like, our thesis basically is that I think like DeFi is going to be as impactful as the internet, but for finance, right? And I think this space, DeFi is going to grow another 100x over the next number of years, and I'm really excited about that. But I think like the main way we impress founders is more by showing them like how we can be helpful to them, and having them talk to other founders that we've worked with and talk about like problems we've helped them work through. Like we've helped founders like solve like their regulatory challenges. We've helped them with like specking out their technical architecture. Way back in the day, like I actually wrote Numerai's first set of smart contracts for their Numeraire token and staking system alongside Xander, who used to work there at the time. And so there's kind of like a wide range of things we can do to be helpful. And so when we're talking to any particular company, like we figured out what they need help with, and then if it's something we can be like helpful to, we introduce them to other founders that we've worked with on similar problems in the past. And once we do that, I don't remember an instance where like somebody is not taking our capital. It's usually if somebody refuses to talk to the references, which happens once in a while. Then like they don't know like how helpful you can be. I think that's like the bigger issue there. So yeah, I think it's mostly about just like helping people out however you can, and then also like being available for founders, right? Like if a founder calls me at 1 in the morning, 80% of the time I'm going to pick up the phone and answer. So it's like that sort of thing too.
Okay. Yeah, well, thanks so much. This was like really great. I'm glad we could have you for this time and to be this point of attraction for so many people in our community and for sharing your thoughts.